Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Marcus New, founder and CEO of InvestX, to discuss trends in the private and secondary markets, as well as challenges and opportunities in the public markets. It's great to see you as always, Marcus. Welcome back to Trade Talks.
Hey, great to be here. Thanks for having me, Jill.
You got it. Can you give us a little background about what led you to founding InvestX?
Well, InvestX really was around how do we get access to these late-stage private companies for investors' portfolios, where historically there was about a dozen institutional investors, Fidelity, Wellington, et cetera. We're kind of the exclusive purveyors of being able to invest in them. We thought that was just fundamentally unfair. And so we needed to have a way to actually broaden that out so that other accredited investors and family offices, et cetera, could get access. And so almost 10 years ago, we started making investments, and we're now raising Fund 4 for accredited investors. And so it's been a great 10-year journey so far.
What are some of the trends you're seeing in the private and secondary markets?
Well, we do run a wholesale institutional block trading platform for block trades of private securities. So if you wanted to buy $30 million or sell $30 million at Klarna, for example, you could use our platform. We're seeing basically still a frozen market. So we talked a little bit about this last time. Last year, pretty much all the assets re-rated. And so institutional investors were coming in, but on re-rated prices where private investors just weren't willing to sell. And so we saw this big kind of gulf of price discrepancy between the bid and the offers. And so the market literally was frozen for a year. And we saw that in the M&A markets, and we saw that in ECM revenues at the firm is also down 80% or more. We have seen the first quarter that start to change a little bit. And part of that probably because the growth stocks started to actually make some movement in January this year, and in Q1 we're pretty high performers. As you know, the Nasdaq's up, I think 14, 15% now for the quarter, or for last quarter. And so that started to also kind of manifest itself in the private markets. Bids were starting to come in, but we still needed a catalyst for someone to sell, right? Because if you bought a 10 times SaaS revenue multiple, for example, and it re-rated the public markets at 6, well, you don't necessarily need to sell it as a private company or sell your private shares down at 6. And so we saw, people waiting and waiting. But then we're seeing now a little bit of capitulation. I'll give you a perfect example, Jill. Stripe, you're probably familiar with that company, just raised almost $6.5 billion at just over $20 a share. Well, the round before that was about $42 a share. And no one in the private markets for literally 6 months would sell it below $35. I mean, it's a world-class company. It's an amazing business. No one would sell it below 35. But if you looked at the public comps, you really need to pay in the low 20s for it, in terms of how it was re-rated with the public, kind of multiples. And so, but then when they laid off, 14% of their staff in December, all of a sudden, a number of those people had to sell their shares in order to capture some of the value of being working there for 5 or 10 years, right? And so we started then to see offers come in the market at 32 and 30 and 28 and 26. And that was the kind of catalyst that kind of reset pricing in that stock and security. And then they eventually raised the $6.4 billion roughly, about a month and a half ago at just over $20 a share. So we're seeing where if you can get some distressed sellers that come into the market, who need a bid, there's very few bids, but if there is a bid, then usually it's changing the price and it's changing the expectation. So this is one of the big issues that we're seeing. And we think as a result of that, it's actually an amazing opportunity because, there's the crossover investors are out of the market right now. The hedge fund, as you probably saw, Tiger just announced it wants to shed a whole bunch of its $80 billion private portfolio to raise money for its losses that it's suffered in the hedge funds. And so what we're seeing is the traditional liquidity providers in the late stage markets have kind of left the market, right? And so we're on the sidelines of the market. And as a result, those of us that are left that are investing right now are almost like price makers. It's literally, if you want to sell it, here's the price that we will buy it at. And if you don't want to sell, it's okay. But if you want to sell it, we're taking it at this massive discount. Instacart, another example, they did around up in the $126 price range. And literally Sequoia, arguably the best venture investor in the planet, invested up there. We're buying at 26 cents on the dollar what they paid. 26 cents on the dollar because there's literally no bids in the market right now. So on one side, it's a really interesting time. The other side, if you're a seller, it's a challenging time for you.
All right. So due to the challenges in the public markets, what opportunities are presented for institutional investors in the secondary market?
Well, here it's really about making sure that you understand the performance of that business, right? So you need to have access to information to understand if it's being affected or not by kind of the interest rate environment and the recessionary environment that's existing in their core businesses. But with saying that you have access to that, there's some really super compelling value in the private markets today, right? And so again, it's a bit of a hit and miss because like I mentioned, a lot of investors don't want to sell securities and take losses because they don't need to. The part of the reason investing in privates is that you can just wait it out, right? And wait for that company to grow back into the new valuation that's been set in the publics. But if you're a buyer, and I don't mean being an aggressive buyer, but if you're a buyer, there's some really cool opportunities for investing at really low discounts and just being the only bid there, right? And so, and eventually, we saw this in COVID, to give an example. In COVID, when Airbnb, the market was trading about $80 a share, and we came in at, during COVID in kind of April of 2020 and put in bids at $42. And we sat there for months, Jill, and no one would sell it to us, right? Because the value was $80. But then eventually someone sold it to us, right? And we're able to pick up some amazing bargains. You have to be patient. You have to know the business really, really well and make sure it's performing. But there is going to be some deep, deep value here that people will be very, very successful in by being buyers here right in this time.
So what are the problems that you're solving at Investex, and who are some of your customers?
Well, so in our fund, so as I mentioned, we're raising fund for accredited investors and family offices and high net worth investors, and we give them access to this asset class and really executing on the strategy of finding really deep value in this market right now. And then our trading platform, which is GEM, which is a wholesale institutional trading platform for block shares, we help institutional investors to be able to sell or to be able to buy large blocks of securities in the private markets, because as you know, it's very inefficient. People really don't know what to pay. It's hard to find bids and offers. And so helping to make that process really work more effectively for institutional investors, and then helping high net worth retail investors be able to get access to this amazing asset class, in a really efficient way and be able to add this sleeve of growth equity to their portfolio.
And finally, Marcus, what's next for Investex?
Right now, we're pretty excited about, and again, this is totally contrary to what the market believes right now, which is basically stay on the sidelines. There's a lot of risk coming around the corner, and I totally agree with that. But I think there's some pretty exciting opportunities to be deep discount value investors here on these amazing, late stage companies that, literally there's no bid, and we want to be price makers here, right? And I think being price makers is going to really turn into really great returns for our vintage is our goal. And so, the next year is going to be an exciting time to find some really great value.
All right. Appreciate the insight as always, Marcus. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill. Have a great day.